So in today's video, we're diving into the Dan Ives Wedbush AI Revolution ETF, ticker IVES. This ticker is built around one of the biggest trends shaping our economy, which is artificial intelligence. It's designed to capture the growth of companies leading the AI revolution, from chip makers to the Mag 7, and even smaller, faster growing tech names. And it's managed by none other than Dan Ives, the longtime CNBC tech analyst known for his bold takes and those colorful suits of his. I'll break down how this ETF works, what's inside of it, and whether it deserves a spot in your portfolio. But now let's get started with the video. The Dan Ives AI Revolution ETF, ticker IVES, is a passively managed fund that seeks to capitalize on the rapid growth of artificial intelligence by investing in companies poised to lead the AI transformation. IVES tracks the Solactive Wedbush Artificial Intelligence Index. It's built by research from Wedbush's tech team led by longtime analyst Dan Ives, who I mentioned before, and has covered the tech sector on Wall Street for over 20 years. Going a bit deeper inside this index, so it uses Solactive's AI-driven system to identify 30 US companies that are leading or benefiting from AI. Now, this could be from chip makers to cloud providers and software developers. Now, each company is weighted between 1 and 4% to keep the portfolio balanced and diversified. Now, the expense ratio is 75 basis points, which is on the higher side if you compare it to other tech ETFs such as VGT or QQQM, but it's pretty normal for a thematic fund where you're paying for the research quality from Dan Ives and his team. Now, the current dividend yield is 0.39%, meaning for every $100 you invest, you're getting about 39 cents per year in cash payouts. Yes, it is pretty low, but it makes sense because most AI companies are reinvesting profits back into growth instead of paying any type of dividend. And as of the last week of October 2025, the fund has recently crossed the $1 billion AUM mark, and it just launched in June of 2025. So yes, it is still super fresh, and that just goes to show how much investor interest there is in the AI theme right now, as well as ETFs being managed by popular analysts such as Dan Ives himself. Now let's dive into some of the top holdings from the Ives ETF. The top holdings as of November 4th, the stock with the highest weighting is Tesla. And yes, they're best known for their electric vehicles, but at its core, it's a technology and data company. It collects billions of miles of real-world driving data from its vehicles and uses that data to train and improve its AI systems for autonomous driving and vehicle safety. The second largest holding is Micron Technology. Micron designs and produces memory and storage units such as DRAM, which are fundamental for AI workloads and data-intensive computing. The third largest holding is Alphabet, aka Google, which Alphabet, of course, oversees a range of businesses, including search, advertising, cloud computing, and other technology services. Alphabet has made major AI advances recently by developing generative models like Gemini and integrating AI into its core products such as Google Search, YouTube TV, and more. The fourth largest holding is Taiwan Semiconductors. TSMC is the world's largest semiconductor foundry, responsible for manufacturing advanced chips used by companies like NVIDIA, AMD, and Qualcomm. Now, if you go to Wedbush Fund's website and you go to their fund IVES, I'll have the link in the description below. Here, so you can see all the top holdings that they currently have, which include other major tech names such as AMD, Broadcom, Apple, NVIDIA, Amazon, and many more. Now, since launching on June 3rd of 2025, Ives has done exceptionally well. Since inception, it has a return of roughly 33.5%, and for context, it is more than double the S&P 500 and is beating the NASDAQ 100 by nearly 20%. And as always, past performance doesn't guarantee future results, but of course it does give us an early sense of how this ETF could perform in the future. So now let's break down some of the pros and cons of the Ives ETF, starting with, of course, the pros. Number one is direct exposure to the AI revolution. Ives gives you access to the leading companies building and benefiting from artificial intelligence, once again from chip makers like AMD and NVIDIA to cloud providers like Amazon, Microsoft, and others. Number two is the research-driven construction of the portfolio. The ETF follows the Solactive Wedbush AI Index, which is built by Dan Ives' research and expertise in the tech sector. That means the holdings aren't just random. And number three is the strong and early interest and performance of this ETF. Since launching in June 2025, Ives has already crossed over $1 billion in AUM and has since posted 33% returns in its first few months, which is unheard of. And of course, no ETF is perfect, so let's go over some of the cons. Number one is the heavy concentration into technology. So more than 2/3 of the fund is in technology, which means it will rise and fall with the sector's volatility. If and when the tech stocks and AI stocks take a breather, this ETF could feel that pullback more than a diversified index such as the S&P 500. Number two is its short track record. Ives only launched in mid-2025, which is only a couple months, so there's no true 5-year or 10-year history to evaluate just yet. And without that long-term data, investors just don't yet know how the strategy performs through market cycles or downturns. Yes, of course, they can look at other AI ETFs that's been around longer, but the strategy is not exactly the same, so you can't compare apples to apples necessarily. And of course, number three, that also hurts many of the other thematic ETFs, is the high expense ratio. That 75 basis point annual fee is above average compared to passive ETFs like QQQM or VOO. So for investors like you and me, the higher expense ratio can and will eat into returns unless the fund continues to outperform substantially, just like how it's been. And now the big question, is this ETF right for you? If you're someone who believes the long-term growth into AI and you prefer holding a diversified basket of leaders instead of picking individual tech stocks, this ETF fits that approach very well. Now, on the other hand, if you're looking for diversified growth, more income or dividends, then Ives may not be the right choice for your portfolio. Of course, it ultimately comes down to your investing style and the amount of risk you are willing to take on. I hope you enjoyed this video, and thanks for watching.